how to keep your business from being audited. And so here's an article that I found. There's so many of them. You could Google and find lots of them too, right? So let's just scan down this and say, okay, we know that more auditors have been hired recently, okay? And they're talking about the increase of audits in 2021. And so audits are on the increase at the time of this video. So how do you avoid being audited? Well, first of all, be accurate, thorough, and neat. What does that say? Concise, correct, right? Refrain from rounding numbers. Oh my goodness, can you imagine? We bookkeepers are like, what? Who rounds numbers? Well, a micro business that doesn't have a bookkeeper might not keep any records of any of their expenses, and they're only doing their tax return. They don't have any records. They're filling out their tax return, and they're like, well, based on the 1099s I got from clients, I'm going to put in that I made $40,000. That's what they mean by rounding. Explain yourself clearly. So they say they don't like things called miscellaneous. There are times where we have unusual deductions. It says right here, there are some unusual deductions where we end up having some miscellaneous, but it should be a very small amount of things by the time it gets on the tax return. I might put stuff to other miscellaneous income, but the CPA will probably code it differently on the tax return. They say file your return electronically, make your estimated payments, issue those 1099s. Look, remember? We talked about the 1099s. They say file on time, but I don't really notice any issues. So many people file extensions, so I don't really notice that there's more of an audit possibility if they don't file on time. So I think that's a little bit of a misleading thing. But what you do need to do is make sure that if you owe any tax dollars or anything, there's any money owed, that is due at the original file deadline. So if you have your own bookkeeping business and you file an extension, that any taxes you owe on the return are still due by the deadline of like April 15th or March 15th if you're a corporation. And so we need to make sure that the money's getting paid on time. Now, you might not have total control over this if you're working as a bookkeeper employee, but it's something that's important that you need to know. Be aware of your income to deduction ratio. If it looks like you're deducting wild, large amounts of things, it's going to raise red flags, especially if it's not in line with other businesses in your industry. And what did we learn that was? Ordinary. They're saying, watch out for the income exceeding expenses and for your expenses not to be in line with other people in your industry, meaning they were not ordinary. Beware of taking the home office deduction. I do agree with that. The home office deduction, like I can do it because I have a room that's truly just for work and I don't go in it unless it's work time. So it's not a spare bedroom where there's a sofa bed and people stay in there when they're visiting, right? You have to have a spot that is only, completely and only. So they do say a separate room or area used exclusively for business. So instead of writing off the entire spare bedroom, you could write off half of it just where your desk is, where if you had visitors, they wouldn't be using that part of the room. Oh, meals and entertainment. We've talked about that. And then the dreaded don't mix business with personal.